IFRS 16, leases, measurement, initial measurement of the right of use asset. Refer to IFRS 16, paragraph 23 to 25, that deals with the initial measurement of the right of use asset in the books of the lessee. When should this right of use asset be measured? At commencement date. According to paragraph 24, this right of use asset should initially be measured at cost. Now, the standard gives detailed guidance of what is included in this cost. The first point is the initial measurement of the lease liability. So when you have to measure the right of use asset, the first thing you'll have to do is to also measure the lease liability. This will be referred to in detail at a later stage. Also included in the cost is the lease payments made at or before the commencement date. Please note, this refers to lease payments that have already been made at commencement date. From that, then it deducts the lease incentives received by the lessee from the lessor. Also included in the cost of the right of use asset is the initial direct costs incurred by the lessee. And the last point we're looking at is any estimates of costs to be incurred by the lessee for the dismantling, restoration, and removal of the underlying asset. This is a principle that has been looked at under IFRS 16, the present value of this dismantling, restoration, and removal costs. This is an extract from Appendix A from IFRS 16, and I want to refer you to specific key terminology applicable to the section we're dealing with. First of all, the definition of initial direct costs. It is any incremental costs of obtaining a lease that would not have been incurred if the lease had not been obtained. Except for such costs incurred by a manufacturer or dealer lessor, we do not look at manufacturer or dealer lessors at this point. So important to note, initial direct costs incurred by the lessee will form part of the cost price of the right of use asset, but this should then meet the definition of incremental cost that would not have been incurred if the lease had not been obtained. Another key term to look at is the lease incentives. Lease incentives received by the lessee is deducted from the cost of the right of use asset. The definition of that is payments made by a lessor to a lessee associated with a lease, or the reimbursement or assumption by a lessor of costs of a lessee. So lease incentives is amounts paid by the lessor to the lessee. Class example 6 illustrates the initial measurement of the right of use asset. On 1 January 2016, Rocco Limited entered into a lease agreement with Mimo Limited to lease a new office building from Mimo for a non-cancelable period of 20 years. The lease does not include any options to extend or terminate the lease, and ownership of this factory building, office building, does not transfer to Rocco Limited at the end of the lease term. The contract is a lease per IFRS 16. The following information has been extracted from the lease contract. 1 January 2016 is my commencement date. On this date, 1 January 2016, Mimo Limited paid, Mimo is the lessor, paid an amount of 15,000 Rand to Rocco as an incentive to encourage Rocco to enter into this lease agreement. So that is a lease incentive paid on 1 January 2016. On the same date, Rocco paid a deposit. So that is an installment already paid on commencement date. Rocco, the lessee, also incurred 20,000 legal fees relating to this contract and paid it to its legal advisors. That is initial direct costs incurred by Rocco. Memo, the lessor, agreed to partially reimburse Rocco for these costs and paid a total amount of 5,000 Rand over to Rocco Limited. That again is falling under the definition of a lease incentive, as we've just read in Appendix A. The lessee must return the office building to the lessor at the end of the lease term in its original condition. On 1 January 2016, Rocco, the lessee, estimated that the restoration costs related to the restoration of this building would amount to 5,272 at the end of the lease term. The applicable pre-tax discount rate is 12.5% per annum, and you can assume that a provision was also recognized for these costs. Please refer back to your IAS 16 knowledge with reference to this future restoration costs. Rocco Limited has calculated that the initial measurement of the lease liability amounts to 15,789,498. So using this information, we now need to determine the cost of the right of use asset for initial measurement purposes. Following the principles as set out in paragraph 23 to 25, the cost of the right of use asset at initial measurement will include the following. First of all, the initial measurement of the lease liability. Please note, in this example, the amount was given. In future questions, you can expect to first have to calculate the initial measurement of the lease liability. What you should know at this point is that that measurement of the lease liability is the starting point of the calculation of the right of use assets cost. There was a lease incentive amount received. Paragraph 24b from IFRS 16 says that is now deducted from the cost of the right of use assets. Initial direct cost incurred by the lessee, be careful. Any initial direct cost incurred by the lessor will not affect the cost of the right of use asset. The lessor reimbursed the lessee some of these costs. It is the same principle as with a lease incentive. The amount was paid, meaning it was received by the lessee. Therefore, it is deducted from the cost price of the right of use asset. According to paragraph 24b, any amounts paid by the lessee on commencement date is added to the cost price. For instance, the deposit paid, 250,000. And then the principles that we've seen before under IAS 16 on PPE. If you have the obligation for future restoration costs, you need to calculate the present value of those costs and include it in the cost price of your asset. So it's exactly the same principles you've seen before. It is the future value of 5 million over a period of 20 years, the pre-tax discount rate, and you calculate the present value to be 500,000 Rand. All the information has been used, therefore the total cost of this right of use asset is 16,539,498.